guys? Thanks for tuning back into another episode of the Game of Cryptos. I hope you guys are all doing well. Today's video, I thought I'd just come out with some content, a list of things, maybe like 10 things that you can do to be successful this bull run. Just tips and tricks. I've kind of had previous videos like that in previous videos, but I just kind of wanted to do like a refresher one, just to kind of have you guys be more prepared, more ready for what is to come in the later stages of this crypto bull run, and when we start hitting that peak euphoria phase. So just before I get into that, right now Bitcoin around 58,000. Again, Bitcoin's just been range bound. It's been in that channel for months and months. So again, until we can get out of this up and down price action, once Bitcoin breaks the previous all-time high, past 69, past 73k, that's when we can start seeing more of the fireworks kind of take off, and then that's when, of course, we're going to see those altcoins start going, hopefully. So, to kickstart this video, number one, of 10 things you can do to be successful in this bull run. And I hope this isn't going to be like boring information for you guys, but I really do think that this will be very helpful for those of you, especially those of you that are new to crypto and this is your first bull run. Number one, know when you are going to sell or have an idea. Ask yourself, will I sell based on a certain time frame, or I take profit when I'm happy with my return? So this one is really important. So have an idea, okay, when am I going to sell? Am I going to sell based on, when I, feel like I made my portfolio reach, its highest potential? Like, oh, my portfolio 10x, 20x, my goal is to make 50k, 100k, whatever X amount of money. Okay, now it's time to kind of take money and take profits. Or are you going to kind of focus more on like a time frame, like the 4-year cycle? Like, oh, Bitcoin's going to peak out, around this time, like it always does in every bull run. What is going to be your way of getting out of the market and taking profit? And by having this and being prepared, you're more than likely going to be more successful. An example of kind of what I'm talking about as far as time frames, in previous cycles, Bitcoin had in 2021 cycle, we had two peaks. We had peak 1, it topped at one point, and then peak 2 topped at another point. I believe it was like a 5-month difference. So kind of knowing, the market cycle and knowing when you're going to take profits, it's going to be very, very crucial. Number 2, ask yourself, are you going to DCA out of the market or take a lump sum? Remember, even in a bull run, the markets are volatile. So again, when you're thinking about, for example, in this picture right here, we're using Caspa, and this is just a drawing of like a random graph, and it's like different price points, $1, $1.52 to $53, etc. Are you going to DCA as you hit certain price points? Like, okay, for instance, in this example, Caspa hit $1. I'm going to take all my money out. Or are you going to maybe sell, at a certain percentage? Like, okay, once this crypto hits this price point, I'm going to take maybe 25% out. And then when it hits this price point, I'm going to take 50% out. These are things that you want to be thinking about, because I promise you, guys, when the market is in peak mania phase, it's not going to be so simple. You're going to have a lot of things, greed and all this are going to hit you, and you're going to start maybe thinking irrational. And it's really important, I think, to come up with these game plans now about, how you're getting out of the market, DCAing, lump summing, because when you have a plan, you're more than likely going to execute it and succeed at executing it. And if you don't plan, that's when people start making mistakes. Number 3, don't keep moving the goalposts for each crypto price point. For example, last bull run, sentiment said, overall, the crypto market, people were saying, oh, Bitcoin's going to go to 100K. And guess what happened? Bitcoin topped out at 69K. So in this bull run, especially if you were someone that was DCAing back in like, the bottom of the bear market in 2022, like, for instance, I'll use Solana as example. Solana, guys, went all the way down to about 9 bucks. I think maybe as low as $8. And then within this new bull run, I think Solana almost got up to like $200, or maybe just right around 200. Now, people that brought in at maybe $10, their initial goalpost goal might have been, okay, I'm happy with $100 Solana. But what happens is once a certain price point gets hit, for instance, in this example, once Solana hits 100, what people tend to do is like, okay, now actually I might not take profit until Solana's $500. And then, if one day Solana's $500, people start then thinking, okay, maybe I won't take profit until, Solana hits $1,000. That's how people kind of get caught. This is how we kind of get caught in this greediness. And when we become greedy, that's when it can be most dangerous, and you can end up losing out on a lot of profits. Because if you hold on too long and you don't take profits, you will be exit liquidity. Someone in this market, some people, and actually a lot of people, have to fail in order for you to succeed. It's not everyone's gonna, rags to riches and make a whole lot of money. For a lot of those people that make money, there's a lot of people that lost money. So again, when it comes to taking profit, don't keep moving the goalposts. If you said you wanted I was gonna sell when this crypto 10x, sell it. Again, not financial advice, but it's just something that you should stick to these things, because if you don't, you might make dramatic, you might regret it in the future, is what I'm trying to say. And then this is just a visual of what I said. So this green line, let's say that was the projected, Bitcoin's going to hit 100K. And then this blue line right here was the actual Bitcoin price. Bitcoin only reached 69K. Another example, Dogecoin. Everyone was saying we can use the same graph, but we can have it with Dogecoin. Green line is the dollar expectation. Dogecoin's going to the moon. Dogecoin's going to $1. Elon Musk, who remembers that on SNL? Everyone's like, Dogecoin was going crazy. And I remember we hit 40 cents, 56, 50 cents, and 60. And I believe it topped out around like 70 cents. And what ended up happening? It tanked, crashed. That's what happens when we start moving the goalposts as far as expectations. We have to kind of, get back into reality. And when we have profits, it's important to acknowledge those profits and potentially take them. As I was saying earlier in a point, this is a graph just showing, this is off of bitbo.io for those of you that are curious. This is showing the previous market cycles. The red line this is actually maybe a month or so behind. We're a little bit further on in this graph. This is a screenshot from a video I did maybe like a month or two ago. But anyways, this is showing you that those of you that are not used to this chart, it's showing you the previous cycles, the one prior and the one 2 cycles ago. The red line is the most frequent. What do you notice on this graph? Well, you notice the green and orange crossed around or started making a movement upwards in a very similar fashion. And then they had another peak in a very similar fashion. And the point of this is to show you that, guys, the market is going to, it's not guaranteed that this is going to happen, but in the last 2 bull runs, we saw 2 peaks happen. 2 peaks. So you might get an initial peak, and then this is showing you that certain cryptos topped out at different times. Uniswap, Chainlink, and Dogecoin topped out around May of 2021, and then you had cryptos like Solana, Polkadot, Ethereum, Sandbox, Gala, Decentraland, Avalanche. They peaked out in the later end of the year, November 2020. in November of 2021. So again, keep this in mind when you're thinking about maybe getting out of the market. And if you see, you see your crypto go up, get it, because some will peak here and then others will peak later. And what will happen is the cryptos that peak earlier, they won't necessarily go back up during the second peak. That first peak will be the most that you will get out of that crypto. So again, guys, just very, very important to pay attention to that type of stuff. Moving on. Again, for those of you, I hope you guys are, learning something from this. Make sure you have money for gas fees for swapping crypto or cashing out. This is very important. I remember in the bull run, I had Ethereum, like when I had cryptos that were an ERC20, when I was trying to swap and get that in maybe to a different crypto or whatnot, there is a gas fee that is associated with it. And during the peak mania phase, when crypto is going crazy, gas fees are going to go through the roof, especially and mainly on Ethereum. That is one of the biggest downsides about using and utilizing Ethereum in any crypto that is an ERC20. The gas fees can be absolutely absurd. That's why a lot of people are moving to Solana, because Solana has cheaper gas fees. So again, the point of this one, number 4, is just make sure you have kind of, some money on the sideline. Money, either regular money that's in fiat that you can then eventually use as gas fees, or have a little bit of ETH, have a little bit of Solana on the sideline for gas fees when you want to swap out and or sell your crypto. Number 5. Know what exchanges you are going to take profit on. Maybe have a few. So maybe you have a Coinbase, maybe you have a Kraken, maybe you have a crypto.com, maybe you have a Binance. Make sure that you have basically played around with these different exchanges, sold some crypto, moved it to your bank, because you want to know how to do this. You want to practice and know how to do this. That way there's no surprises when it comes to taking profit. Again, as it says right here, practice selling, make sure there are no issues and surprises for the peak of the bull run. And then also, very important to know, some exchanges crash during the peak mania phase. You'll have instances where, like, I remember Robinhood would not, I think it happened with like GameStop, when things are going crazy, they'll actually pause trading. So if you're someone that is trying to buy in on this crazy phase, you can't buy in. Or if you're someone that's trying to cash out because you just made a 10x on on the stock or on the crypto, sometimes they have the abilities to do this. And sometimes just because, since there's so much volume, sometimes Coinbase even has issues where it's saying, hey, we're resolving this issue, we'll get back to you. And it can be very stressful because you could be trying to cash out and you're unable to because the funds are frozen because of the craziness that's going on in the market. So it is a very good idea to have different exchanges to be able to potentially cash out to. Number 6, if using a cold wallet, this is going to kind of go hand in hand with the previous point. Make sure you know how to send cryptos to exchanges, which are the off-ramps. Be careful when copying the address. One typo and you can lose it all. So 2 things here. Again, get practice with sending. If you have a cold wallet, get practice sending money or sending, a crypto, or sending a crypto from, for instance, your Ledger or your Tangent to Coinbase, for instance. Just have practice doing that. Make sure there's no hiccups, so that way, if there are any, you can kind of figure that out now. That way, when it comes time for the real deal, when you're sending money, sending these cryptos, you don't have any issues, because it would be terrible to do all this hard work, all this research, hold for this whole bull run to mess up, to fumble it back, so to speak, right at the end. Very, very important stuff, guys. Number 7, ask yourself, what is your exit strategy? Will you sell into stable coins, put it in the bank, etc.? So again, like something that is very important is kind of like, what is your reason why you're doing this? What is your ultimate goal? What are you going to do with this? Kind of like, what are you going to do with this money that you're going to make? Are you going to put it in the stables and then wait to, funnel that money back into the market in the bear market? Are you going to put it in your bank account? It's important to kind of have this game plan and remember the long-term plan. Are you going to buy back in at the bottom of the next bear market? Kind of like what I was just saying. What are you going to end up, doing? Is this the only time you're going to invest and then you're never going to invest again? Just kind of give yourself an idea. Are you going to leave some crypto in there? If you own Bitcoin, are you just going to let, your Bitcoin continue to stay in there? If you own, any other crypto, are you going to only just take 75% off the table and then leave the rest, to ride into the next bull run? Those are questions you should already be asking yourself. And following that, as a potential recommendation, but just a question of food for thought, for capital preservation, do you want to put it into Bitcoin? I spelled Bitcoin wrong, my bad. Bitcoin, haha. But no, that's a serious thing. Like, I know one of my main goals is to take profit and to either cash it out into stables or into my bank account, and then I'm gonna wait for the cycle to kind of play out, and then we're going to go into another bear market and hopefully get Bitcoin for a really, really cheap price. Now the question this time is, how low is Bitcoin going to go? If Bitcoin goes to 120, 130, is Bitcoin going to retrace to 50, 40K, 30K? Last time we reached 69K and it retraced down to 15.5. So these are things that I'm thinking about, because I know that eventually my end goal is to gain more Bitcoin, to get more Satoshis. That's my goal. It might not be your goal, but that's my goal, because overall, I do think that Bitcoin is a hedge against inflation. It is going to preserve your capital. It is, obviously, the gold 2.0. It's going to help give you more purchasing power than putting it in US dollars, because as we know, inflation is continuously going up, so it's devaluing the currency, meaning we're losing money as we let money just sit in the bank account. So again, something to think about. Number 9, we're getting really close wrapping up this video. Don't get too heavy into meme coins. So this is kind of going more back to kind of like your investment thesis. This is kind of we're looking at reflecting at your portfolios when it comes to portfolio allocation. So this is kind of a backtrack. I could have arguably put this more in the beginning, because what I've talked about previous is kind of more, preparing about getting out of the market. But this to me is very important. Meme coins are great. I made a decent amount of money off of Dogecoin back in the previous bull run. Gotta love memes because they do give the average person a chance at potential freedom, or at least making a lot more money than they normally would, just working a job. But to be fair, crypto in general is risky. Meme coins are arguably the most risky. It's a high risk but extremely high reward. Don't put more money than you can afford to lose. And when it comes to a portfolio allocation, do not put no matter how much money you put in a portfolio, whether it's 5,000, 1,000, 10K, don't put 90% of your portfolio in a meme coin. That meme coin can rug. It can go to zero. They're heavily manipulated. And obviously, when the bear market does come, guys, we are going to see all the altcoins crash like 80, 95%. So if Bitcoin's going to go down 60%, 70%, well, guess what's going to happen to these meme coins? They're going to get absolutely obliterated. So I'm not saying to not be in meme coins, guys, but I'm just saying be careful. And, as a reminder, diversification is good, but obviously not being too diversified where you're too spread. But maybe, don't just get all these low caps, hundreds of thousands or millions of dollar caps. Maybe get some of your mid caps, get some high caps, because that will kind of solidify your portfolio. give you more foundation, and make you feel more, safe about this, continuing this bull run, and making you feel like, okay, I got some really solid foundational picks that, I feel like they're going to hold my portfolio down, rather than, having like a meme coin and just, being super stressed out every day because it's so volatile. And then the last one to end this video: don't keep chasing the pumps and getting FOMO, especially from new coins launching in peak mania phase. Don't keep chasing all the shiny new cryptos. Be happy with your bag. So as this bull run continues out, and when it eventually comes to an end, maybe sometime in 2025, whether it's the summer or Q4 of 2025, you're going to see new cryptos come out, and they're going to be really appealing, but they're also going to be very, very risky. So just be careful. Sometimes there comes a point where you have to be happy with the bags that you have. Just sit on your hands and let things play out. You did the research, you have the conviction, let things play out, and don't always chase the new thing, because it doesn't necessarily mean that it's the best for you. It could end up hurting you in the end, hurting your profits, and ruining all your gains that you made for the bull run. So I hope you guys like this video. I hope some of you learned something and made you think about more about the game plan for this bull run, what you're going to do after. Let me know in the comments what you guys are going to do. What do you plan on doing with your crypto? How are you going to cash out? You put it in the stables, or you're going to end up buying Bitcoin later. What are you going to do? And then until next time, I will catch you guys.